Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video, I'm going to walk you through the mistakes that every investor makes. And I talk about this an awful lot on the podcast in the respect that it's really important to try to learn from other people's mistakes so you don't have to bear the cost of making those mistakes yourselves. So look, I thought it would be an ample opportunity with lots of people very bullish in the market and the financial landscape not looking particularly healthy right now to cover the most common mistakes that every investor makes. So you can learn from other people's mistakes. I do encourage you to jump down into the Discord. Link is in the description of this video and I will share all the relevant information there so you can do further research on the mistakes that people tend to make in investing, be that crypto stocks or precious metals or any other investment for that matter. So if you enjoyed today's video, mash up the like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video. Right, let's get down to the desktop. So the first thing that I want to talk about is second order effects, and this is one that a lot of people just don't have any idea about, but you know, there are consequences to consequence. So a lot of people would use, I don't know, the collapse of FTX as an example, right? So whilst many people were talking about FTX, Chris, Nick and our team were looking at all the projects associated with Alameda Research and FTX, all the investments they made. This meant that Nick and myself were ahead of the game and we could highlight the short opportunities for FTT, Solana and many other altcoins off the back of the events that were unfolding. So look, these are really important things to understand. Had you not been on FTX exchange, there was a secondary consequence and a consequence to the to that with all these other altcoins. FTX collapsing meant that Alameda Research was going to potentially collapse and was also involved in the fraud, which meant that the investments that are being made by Alameda Research and FTX, the likes of FTT, Solana, and many others, were going to fall in price because more of that crypto was going to hit the market. And ultimately, you didn't necessarily need to be on the FTX exchange to lose your money. So what I would encourage people to do is learn a little bit about the secondary effects within your investments. I will share some stuff in our Discord, but I would also encourage you to start thinking a little bit differently about your investments and your investment strategy. Think about, what would happen if, perhaps the project you're investing doesn't meet a certain milestone. What about if another project comes into that sector with better technology? All those sorts of things can catch you out. Same with collapses of different companies and so on. So that's the first thing that I wanted to cover off. So let's move on to the second. So the next one would be overconfidence. I mean, we've all seen the influencers that are full of confidence, that say they know the markets and imply that they know better than everybody else. But look, the fact remains, regardless of influencer or individual, overconfidence, whilst can sort of be quite endearing and draw a lot of people in, is also a big risk. Having overconfidence and being confident are two different things. And ultimately, the overconfidence can lead you down the wrong path. And I want to get this out in the open. There are, many YouTubers, influencers, and individuals out there that talk as if they know something they really have no idea about. There are countless amounts of people talking about how great Bitcoin is, how great Ethereum is, how great Cardano is, how great Algorand is, and ultimately they put inaccurate information out about the underlying technology. There's people talk about XRP and they get the whole technology part in accurate for their audiences. And it doesn't matter whether they're the biggest YouTuber in the world or the smallest in the world. Size of following makes no difference. And that's why Nick and myself always say, go away and do your own research, do your due diligence, because overconfidence can draw a lot of people in. And look, I'm the first person to get rid of people out of my inner circle that talk confidently, if I can get my words out, about things they don't understand, because ultimately they will lead you down the wrong path. Moving on to number 3. So the next one is understanding risk, or identifying the risks. This is one of the biggest mistakes people make in this space. And I'm going to use FTX as a prime example of this. There was people out there that, basically traded the market impeccably, but they didn't have good risk management. They didn't employ any risk management. They had no idea of how to basically understand the risks that they held. They held all of their trading funds on FTX and held third-party risk, didn't understand third-party risk. And ultimately, you can be the best trader in the world and make £1 million or $1 million in a bear market, bull market, but if you don't have good risk management, you risk losing it all. So why not check out 𝗕𝗘𝗪𝗠𝗠𝗘𝗥𝗦 and learn about risk management? There is various different types of risks in this crypto space, third-party risk being one of them. Understand what it is that you're investing in, understand the risks, and do a risk assessment and employ some risk management. It's so important. I am always preserve capital first, make money secondary, because if you lose all of your capital, you can't make any more. So number 4 for me would be confirmation bias. How many of you, and own up now, let us know in the comments below, just follow people blindly? There's so many people in this space that are the first to blame other people, but don't take any accountability or ownership over their investment decisions. It doesn't matter that the influencers are saying that it's not financial advice and that you should go away and do your own research. You should listen to that statement. I feel that a lot of people believe that this is, just a, get out of jail card that they can just show to give financial advice, but then basically not have any repercussions. But ultimately, people are giving their views, their opinions on how they see cryptocurrency, stocks, and various other, it could be precious metals, for example, and they're not giving financial advice. And I think people forget to understand that and ignore that fact and just take it as financial advice. And that is a very dangerous thing to do. You might believe that a project is going to go on to do really well. For example, you might think 𝗕𝗘𝗪𝗧𝗧 is an amazing project. You will then find somebody like me on social media that will confirm how you feel about that project and perhaps follow me. This is like, I guess, psychology 101, right? What I would encourage people to do is find and seek out people that have an opposing opinion to you on, say, 𝗕𝗘𝗪𝗧𝗧 as the example, and research what they're saying. If they might say that 𝗕𝗘𝗪𝗧𝗧 is a terrible project, and if they do, and they explain why, start to look into that rationale and see whether it resonates with you. I really do encourage people to be open-minded. If you're not open-minded in investing, then I don't think that investing is for you. I don't think that you'll be successful. I think being closed-minded is just a form of keeping yourself poor. I really do believe that. Let me know your thoughts and opinions in the comments below, and come clean. Do you just take the lead of an influencer and just follow blindly? Let me know in the comments below. So my next mistake that I feel that most, if not all, investors make is really understanding themselves, understanding where their skill sets lie. I think this is a really important thing to understand. There's many people in this space that got in just because of like Dogecoin, like a meme coin, like They heard about it from a friend, and they don't really understand the technology. Now, what I would say is try to understand it, try to learn it, and stay within your skill set. So if you know that you're great at researching projects, research projects. If you're great at technical analysis, do technical analysis. If you are good at one of those things, or you're more well-rounded, then maybe you can focus on multiple things. Like for me, for example, I like precious metals, I like watches, I like property, but like I focus mainly on cryptocurrency because I understand that far better, and I think that is a recipe for success. There's so many people that put their money into all these different sectors, and they don't really understand what it is that they're doing. They're just throwing a dart and hoping for the best. And I think that is a big mistake. And I think there's areas if you can understand yourself that that perhaps is not your biggest skill set, then go seek out and educate yourself on those and make those weaknesses strengths. I really do encourage people to invest in themselves, particularly doing assessments on your understanding, your skill set, your weaknesses is a fundamental thing that everybody should do. I see comments where people are like, "Oh, you're terrible, Chris, and you should get Nick to take over doing fundamental analysis." Well, Nick knows his strengths, and his strengths is not fundamental analysis. That would be like me doing TA and Nick doing the fundamentals. It would be an absolute disaster. Could I educate myself and do technical analysis? 100% I could. But I'm in my skill set, my zone, and I'm going to sit right in it. Why? Because ultimately I have great success in highlighting hidden gems and potential projects that can go on and flourish. We've got a fantastic track record, the likes of SingularityNet. We were talking about that in 2020, our 4th ever video, the power of AI and what it's going to do within the world and the crypto space. We talked about ADA at less than 5 cent. We talked about Matic at like 1.5 cent. All these projects that we called out over the previous bear market that went on to do really well. This was because we sat in our skill set and focused on the things we were good at. And I think that's really important, and I hope it's a message that's heard loud and clear. So the next mistake that an awful lot of investors make is being able to adapt to change. For me, this is one of the biggest mistakes that people make in the space. There is so much change. Crypto is evolving regularly, daily, hourly. And if you are not good with change and being able to adapt and flex your investment strategies and being able to keep up to date with the projects, the space, and all that wonderful stuff, then you are going to really struggle. So make sure that you're immersing yourself in a fantastic community that are focused on the projects that you're invested in, and make sure that you're able to adjust, because your portfolio, if you just walk away and don't keep an eye on these projects, might be worth very little come the peak of the bull run. We're in a bear market right now, contrary to what people say, and there is a huge potential that a project could just go bust. There's normally signs on the wall before this happens, but if you're not engaged and not watching and able to flex, pivot and all that wonderful stuff, then the chances are you're going to lose a sizable portion of your portfolio. So yeah, look, being able to adapt and being able to move away from projects, not being focused just on one, and bought into it so much that you're unable to leave it, like married to your bag, I think is the phrase that people use. Then you're going to be in trouble. So being able to be flexible and adapt to change is so important, and one of the biggest mistakes that I see people making in the space. How many times have you seen us do a video where it's like we sold all our reef, like we saved so much money moving from reef to anchor, and that was adapting to change. There was changes that we saw, things that we didn't like that the team were doing, and red flags and all that stuff. So we made a change, right? And that is so important. So I think this is a really important one to raise, and that is seeing the bigger picture. The reason why Nick and myself, I feel, have been so successful in this bear market, accurately predicting the bottom in June before it happened, accurately predicting that there was a new lower low, which happened in November. The fact that we were able to predict the collapse of FTX, predict the the value of FTT and Solana falling significantly, how we were able to predict BlockFi before anybody else, was because ultimately we could see the bigger picture. It's the same now. We look at various different things. We don't just focus in on cryptocurrency and just the projects we're invested in. We look at the bigger picture, and I think that people fail to do this. They fail to be open-minded and go and approach other people that have different views and opinions, and listen and be adaptive, and go and do their research, all this stuff. The bigger picture is so important. So let me know your thoughts and opinions on looking at the bigger picture. There's a lot of people that will just solely focus on Bitcoin and not look outside of Bitcoin, and I think that is dangerous. So again, the next one that I want to highlight is emotional investing. Nick and myself always say take the emotion out of your investments. It's so easy in cryptocurrency to marry your bag, is a term that I used earlier in this video, where you join a community, you love the community, they're bubbly, they're fantastic, they echo your thoughts, your opinions. You guys are so aligned, but it's so important to not be emotional. I mentioned us selling off our Reef Finance and moving into Anchor. All we saw in the comments of those videos was emotion. It was all this anger that we were moving away from Reef Finance. I think that, being emotional in this space is so dangerous. So if you find yourself being very fond of a project, make sure that, you check yourself and you really consider whether you're married to that bag and how you would feel if you were to get rid of it. Because there are times in this space where project teams don't do what they say they're going to do, or they seem questionable in their activities. And I always say that actions speak far louder than words. So it's really important to take the emotion out of the investments and look at it like, purely that it's an investment. Why are you here? You're here to make money, and you've got to remember that and pitch that self to yourself on a regular basis. Do not marry your bags. It's very, very dangerous, and a common mistake that every investor seems to be making. And we see this in a day-to-day time period. So yeah, I think this is a really important one. Let me know your thoughts and opinions. So the final mistake that I feel that every investor makes is not having patience. And I want to say the time horizon for your investments is something to really figure out before making the investments. I mentioned, relatively close to the start of this video that, we were probably one of the first big sort of channels to be talking about SingularityNet, and that was back in 2020. And I imagine a lot of people sold between 2020 and 2023, right? And many people may have regretted that. And I think that's a key indication that this is very, very important to have patience in the space. Make sure that your time horizon for your investments is a longer one rather than a shorter one. I think it's easier to make more money and more meaningful, life-changing money in this space if you have a longer term mindset. This isn't about getting rich quick. It's about making strategic investment decisions, thinking about the bigger picture and where the crypto space is heading. And ultimately that is the road that Nick and myself have taken. We've always talked about a 5-10 year time horizon for our crypto investments. We made lots of money in the last bull market. and we probably only need one more bull market to live, comfortably for generations. And I think that this is something that a lot of people don't take into consideration. So look, I think those are the most important lessons and tips and common mistakes that a lot of investors, if not all investors, make in this space. I hope that raising these were useful and meaningful in some way and support you to go on to be very successful in this space. I would love it if you join us in our Discord, which is absolutely free to join. The link is in the description of this video. And if you enjoyed the video and appreciate us highlighting these for you, do mash up that like button and subscribe to the channel. We really do appreciate that. Right, I will catch you in the next one. Take care.